All right. Here we are. Let me get this out over here. It is Monday, December 2nd, 6:30 p.m. Eastern Standard Time. How is everybody? Now that the Thanksgiving holidays are over, the long weekend is over, everyone's back to work. All traders have found their happy home in front of their desks once again. Here we are. And what happened? Well, another day, another 350, right? That's what we're looking at here. The overall structure is still, local pullback. So weak bounce, local pull, looking to flip, SR flip on the 350. Reasons for downside, right, would be the overall level up top. Let me slide that back a little bit. Okay, upper trend on local. Channel coming down. Yet to break and close a daily candle above that level, above that line. All right, that's number one. Below the 20, below the 9, that's number 2. Overall pressure from, the obvious under the 200, but losing this range up here, losing the horizontal support resistance, and losing the new local horizontal support resistance. Those are reasons to get short. Those were the reasons to get short. Reasons to get long are few and far between, but they are there nonetheless. First and foremost, the 350 holding as support for now. That would be number 1. Pullback 618 holding as support. That would be number 2. And number 3 would be the new local CME gap, which is sitting at 78.50. So, 78.05, I'm sorry, 78.05, 75.55 to 78.05. We had a partial fill, right? Partial fill, but nothing super crazy yet. We still have a little ways to go on that. So that would be one more reason to get long. So it is a bit of a struggle. There's a lot going on. Volume-wise, pretty bad. This was Saturday and Sunday's volume. So weekend volume on the holiday was, not great, right? Still way better than these weekends, nonetheless, but under average, and just overall just not very good. So a weak sign from the Bears, as the Bears have control, and there's just not a lot of volume to go with it. So there's not a lot of strength behind those moves. Today, we're Monday. Now in the past we've had, Monday Bloody Monday, which is essentially, dumping on Monday, pumping on Tuesday. But we have had pumps on Monday before. Follow the lines and you'll see the Mondays. So Monday pump, not that long ago. This was like a midweek pump, so that was a little weird. This was a Tuesday dump, so that was a little caught a lot of people by surprise. This is a Tuesday pump. This is a Thursday pump. This is a Monday pump with a Tuesday dump and a Wednesday pump. This is a Monday pump with a Tuesday more fierce dump, right? So it's a mixed bag. This is a Monday dump here. This is a Tuesday dump here. So a bit of a mixed bag. Any way you shake a stick at it, is the volume's low, right? And we definitely want to see better volume. Seeing volume like that is never good. Never good. You at least want interest in the trading period, right? And then you can work around the price action, but you at least need interest there, Okay, so got my coffee. There we go. Find a little home right there. Very nice. Very nice. Okay. Let's see. Roger D, what's up? What's going on? There we go. Find a little home. Alexander Hagen, good evening. Daniel, hello. Michael, hi guys. Alexander Hagen. Thoughts on this large buy wall on Binance, mid 7,200? They could be using that to prop the price up, or they could be using it to force front runners of those levels in order to push the price up. It also could be used as just a wall for psychological purposes. It could show that there's a ton of liquidity there. As they get more and more buyers there, it's good for sellers to dump their bags into high liquidity pools. So you could use it both ways. It really depends on how they've been used in the past before, specific to that pair, specific to that exchange. The reason is, right, you could think, like, you can make an argument both ways. You could say that, okay, you have a buy wall, right? That's essentially saying, let's do this, for example. Let's throw on the 15-minute chart, right? And let's just say, we'll just do a little illustration here, right? How's that sound? All right, so 15-minute chart, here we are. And let's just put a big old block here. And we'll just say the buy wall is at what, 72? Well, we're going to change that for this illustration because that's just too far down. We'll say the buy wall is at 72.70. All right, how's that? And we'll just draw a line out like that and say that's the buy wall, right? So you got a big old monster buy wall. Oh, 72.83. Come on now. Freaking magnet. Okay, 72.75. That's your buy wall. Jeez. So, we'll help illustrate this. Buy wall. Okay, very good. So some dude's sitting over here and he's like, "Hey, I got some money on this corn." Right? And he's going to be like, whatever. I got $1 million. Nah, that's not a big enough wall. I have a $5 million that I'm going to put up, right? And I want to buy. I got a limit buy. There's not a market buy. There's a limit buy at 72.75. I want to buy that. That puts a ton of interest in both parties, right? The longs are saying, hey, man, this guy's getting long with a $5 million order. That shows a ton of interest. That shows that people definitely want this, right? People want to buy this. The problem is, all of these dudes down here, let's see if we can find a stick person. Yeah, this guy right here. This guy's like, dude, I want to buy it too. And I want to buy it. And I want some. Whoa, that guy's drunk. Don't worry about that guy. Yeah, that guy's definitely wasted. So all these guys, they want to buy it too, right? Oh, that guy had way too much turkey. Here you go. All right. So all these guys want to buy it too. The problem is, right, for these guys to get in the game, right? They can't put an order under the wall. Because if they did, what would happen? Not that it would never fill, but you have to have enough sellers offload $5 million worth at this guy's level just for this guy to even attempt to get his order filled. So what they do is this. They front run it. Okay, I'll bite, and I'll buy right here. And then the next guy says, all right, well, I'll buy two. And this guy says, all right, well, I'll buy two. And this guy says, okay, well, I'll buy two. Right? And now what happens is you push the wall back by front running the buy wall and getting more buyers in, but they get in at a higher price. Right? Now, the other way to look at it is this. By propping the price up, you give these guys, let's see if we could do maybe that, and that. Oh yeah, it's a family affair. You got all these sellers over here that are trying to dump. They're trying to offload. They want to go down. They want to go down. Right? But they don't want to go down. They have a big order, right? They have, let's not say 1 million, but let's say they each have 1 million. Right? That's easy enough. And nobody wants to sell for a loss. So they're sitting here and they're saying to themselves like, geez, we need some liquidity. We need some people over here. We need to be able to get this, down, right? I want to sell 1 million, but I can't sell 1 million here. There's just not enough buyers, right? So by adding a wall over here, we get all of these orders, right? Not to mention all the orders behind the wall. All these guys layered up and layered up and layered up, right? So then when you have all those orders layered and they're in the books, well, then this guy, he said, I'm going first. He's going to dump. And he absorbs this, and a piece of the wall, right? And now price comes down to here. Well, then they allow it to build back up and up and up and up. And then this guy says, all right, it's my turn. I'm going to go. Now I'm going to offload. And he's going to push, right? And get through all of this again, right? Because you're still going to have new orders are going to be in place. All right, so you can have buy walls and sell walls, right? The biggest issue with those are they could be pulled at any time. Right? So I don't put a whole lot of weight in buy walls and sell walls, right? Because it's like, why bother? It's just a huge waste of time. If you have the capital, you could throw a wall up there, for whatever, $15 million, and then just pull it. It adds that moment to all the other traders that are saying, oh, there's a ton of interest. Or you put a massive sell wall up and it's like, oh man, all the big guys are selling. They add all that pressure, pushes the price down. Then everybody in there that's trying to dump is going to dump lower, right? But is that really bearish or is that bullish, right? Are they suppressing the price so that they can execute the larger orders for buying, right? The whole idea is, what are you doing? What are you doing to the price? Why is it beneficial to you? Always think like you got 10 million in your pocket. You know what I mean? How are you going to move that around? What would be the easiest way? You can't just fill an order at 10 million. It's not that kind of market. It's not Forex, right? So how are you going to do that? How are you going to get all those buyers to all get your order filled at the same level, or at least close to it? And chances are you won't. So you got to drum up a little bit of a little bit of science in there, a little bit of psychology. You got to create the news, right? You got to create the FUD, or you got to create the excitement. If things get really, really, really excited, right? That's usually a pretty bad sign. Because the idea behind all that excitement is this. Great news, great news, great news, great news. Keep on buying it, you FOMO buyers, because I'm dumping my bag. That's all that means. Time and time and time again, you get all this great news, great news, great news, but what moves the market, what sets the wick on fire are the whales. What continues the push are the FOMO buyers. Same thing in reverse. What sets the tone are the whales. Market selling, clearing the book, dumping it down, giving it a good $300 push. And then all the panic sellers come in. And they just start dumping their bags. Market sell. On top of that, stop losses getting hit. People getting liquidated. It is just a domino effect of, the most disastrous thing you could think of. And this guy's sitting up here like, look at what I did. Yeah, it's awesome. He just sold it all down here. But you know what this guy's doing? He's buying all of this. He's buying all of it. He's just going to sell it again right here. All right. When you have enough capital to move the market in a specific direction, and that's why we say violence on the weekends, right? Violence on the weekends, because the books are thinner, right? So, let's this is going to be a drawing day here. So here are the books, right? You got your ask and your bid. So let's make this guy red. Okay. So now what you're looking at is, essentially how your book sits, right? And this is like on any exchange, but this is just to give you an idea of like thick and thin books. All right. If you have a ton of traders over here, okay? And so let's do this. Let's make volume intense, right? That's intense, right? That's really intense. You have all these people want to sell. But you got these thin books, right? Not right here, very thin. There's not a lot of buyers. Not a lot of people that are like, I want to buy it right now. So you got all these people here waiting, right? And they got orders in and they want to sell at all different levels. But let's say they just range. Let's say this was the book, right? And they want to go from, 82 whatever up to 96. These are all these orders and they all want to sell. And let's say that equals, whatever. Let's say $10 million. Right, in total sell volume that want to sell in the current book. And then, for the people that want to buy, let's just say you got $1 million. Now, how does that work? What are you going to do here? That's not going to work. 10 doesn't go into 1. You can't sell 10 million worth and only have 1 million buy. You're stuck with another 9 million on the sell for pressure, right? And vice versa. What if everybody wants to buy but nobody wants to sell? Now you get into the conversation of supply and demand, right? Which is tied in, but it's not the same. Supply and demand is very simple, right? Right here, you have a massive supply. And all these people want to sell, right? All right, so it's Cyber Monday. All right, it's Cyber Monday. All these dudes over here, all trying to sell TVs, laptops, phones, whatever kitchen gadget you could possibly think of, right? And you got them all, right? You got let's see, you got Walmart. Well, you guys are in different countries, so you may not have all these, but whatever. You got Walmart. Let's see. You got, what the hell is this? Let's get rid of that. All right. I said get rid of it. You got Walmart. Then you got Amazon. Amazon, right? And then you got Best Buy. And just for good record, let's throw in like Costco over here, whatever. Okay? All of these guys are trying to sell the same TV. Every one of them. Right? And they're all trying to market their TVs to you. They got a massive supply of TVs. They want to sell it to these guys. Problem is, there's not enough buyers. So you have an oversupply. Right? So what do? They mark the prices down. And when you still don't have enough, then you start dumping. So, all right, we will take, a fraction of what we were asking before just to get some buyers in here. Now, the vice versa of that would be say, hey, we got some TVs. Sure. It's a limited supply. We only have a few. Yeah, but you're marketing that stuff to, millions and millions and millions of people who want TVs. Yeah, we know. We don't have a lot. So now you got this. Say, okay, well, I'll tell you what. I'll pay a little bit more. And they're like, yeah, actually, we're gonna raise our prices up. We have so few, and they're in such demand that we could just charge more. Okay, well, we'll raise our prices up even more. Yeah, still not really budging over here. Well, fine. Okay, I'll just whatever you're asking, I'll pay. All right. Does that make sense to you guys? It's all hand in hand, right? Support and resistance is similar, but it's not exactly the same as supply and demand. And supply and demand is again not exactly the same as looking at order flow or looking at order books. And again, order flow is not the same as order books, right? So they all tie together in one big happy family of trading, but each one is their own very specific thing, right? Each one is their own very, very specific thing. Yeah, I don't know how else to say that, but its own specific thing, because that's exactly what it is. All right. So hopefully that helps. Let's see, G Money Bags. What's up, guys? What's going on? Hazer Mater, hello. Joa Roca, hi. Alexander Hagen, 7260. Is that the wall? Yeah, I'm not. Thank you. G Money 233. Have no clue what that means. Sorry, my cat stepped on the keyboard. Very nice. Thank you, Money Bags. Alexander, thanks for explaining. Yeah, no problem. Thoughts on Huobi and OKX rumors? Yeah, with the Russians and again, right? It's like rumors. So when you trade other markets, some markets can be heavily based on news, right? Forex, for example, like everything international, anything that has to do with money, anything in the Senate, in the House, anything that the president will tweet, prime ministers, presidents of other countries, like all of that stuff is relevant news-wise. And the news, pardon my French, is bullshit, right? It's just whatever they tell you without anybody ever fact-checking anybody or actually getting the information themselves. So because that is the way it works, and because news can push markets or pull markets down or push markets up, you have to be very cautious when it comes to news. In crypto, at least in the last 3 to 5 years, we could say that buying the rumor and selling the news when it comes to news in crypto is 9 times out of 10 going to work out in your favor. So in other words, you got a whole bunch of good news, you got a mainnet launch, you got all this stuff propping up. That's when you buy, right? And you see all of this buy, and the chart is going up, and then they release that big thing that they were talking about, and they just dump. The market just dumps. It's a game of accumulation and distribution, right? They're just buying it, and they don't care. They'll ladder all their orders in. They'll buy it at 4,000, 5,000, 6,000, 7,000, 8,000, 9,000 just to sell it at 14. You understand what I'm saying? So, no matter what the news is, or no matter how relevant it is, right, the idea is the same. If it's bullish news, chances are a dump is coming. But it's after the big guys have really accumulated enough, right? So there's no set amount, right? There's no limit to their madness. It's just a matter of trying to find any identifying factors during the course of it, protecting your capital at the best you can, and then trying to ride the wave. Ride the wave up, but maybe you get out a little bit early with a portion. You sell 20%. And it keeps going up. You're like, oh man, that's crazy. You need to sell another 20%. If you're not super greedy in this market, then you could do well. If you're okay posting 10% gains on something that after you sold went up another 30%, then you're good. But if that kind of thing is going to drive you insane, this market's going to be tough for you, right? Because unless you protect yourself with something like a trailing take profit, then you're going to get into situations where you're going to exit a trade because that was the right place, the right time, all the TA lined up. That was resistance. You're getting out of the trade. You're happy with your 10%. And had you never seen the markets again in your life, you would think like, I did great. I totally kicked ass. Until you find out, you wake up the next morning, it went another 30, 40, 50%. And now you're mad about that, right? You're mad because you missed out. And it's totally normal. Don't get me wrong. I'm not saying you got to be a robot. I'm saying you need to be able to deal with that and get it the hell out of your system, right? Because those types of emotions, they will haunt you as a trader. You know what I mean? Be happy with your gains. Get the hell out. Look for the next setup. Take it. Go. Get those gains. Get the hell out. That's a wrap. If you get so tied into some of these projects, like whatever, we could talk about any coin on the list and just say, oh yeah, but I really, really, really liked what they were doing. They really had a great idea. Maximind coin, right? They really had a good idea. They really had something going on there. So a week ago, they were up 119%. And you're like, hell yeah. And in the last day, they dropped 53%. Right? Opportunities come up all day, every day. The thing is, you need a couple pieces of the puzzle to line up correctly in order to take a trade that has the least amount of risk with the best possible reward. And that may not always be the coin that does 25%. That may be the coin that does 8%. But that 8%, you would have only lost, a 0.5% had it not done what it was supposed to do, or had it not done what the charts were telling it to do, as opposed to the 25% where maybe you had to risk, losing 8%, and therefore your position size was completely out of whack. You know what I mean? You had to put very little on that actual trade in order to muster up 25% gains and outweigh the possibility of losing, 8 to 10. Right? So, that's the market that we're in, though. That's crypto. Crypto has fantastic opportunities across the board, but timing is vital. And not only is getting in at the right time, selling at the right time, but having ideas or other areas of confluence to put confidence in that trade. Say like, okay, with housing, right? There's a buyer's market. There's a seller's market. You want it to be that. You want it to be in your favor. So like we talk about every day, right? Any long right now is a counter trend trade. Why? Because, clearly since June, we've been down, right? I mean, nobody in their right mind can actually contest that. This is a local downtrend. If you only zoomed out to June, then it would be, like a macro downtrend, but it's not, right? You just slide back a little bit, get yourself back to 2017, and then you could say, okay, well, on the bigger scale, we have a larger macro downtrend, right? But you're not taking this long or this short based off of this monster move. It's more on the local side, right? And now on the local side, and if you bring in the last major impulse that created that high, well, then this is a pullback, right? But a pullback is still a local downtrend. Just because the overall structure could possibly be an uptrend, which it's not just yet, you would need another couple pieces of the puzzle. If this was your A, this was your B, this was your C, well, you would need a D, and it would need to be up here, or at least higher than 13,880. in order for you to establish this as an uptrend. Currently, this is a pullback with a potential uptrend in a larger macro downtrend showing a local downtrend. And that's exactly what we're in, a local downtrend. So any longs you take here, right, can be severely handicapped just by the fact that you're in a downtrend, right? It's a counter trend trade. It's inherently more risky. So that's something you need to, weigh as you look at trade setups. All right. All right, here we are. We closed it down. Candle is out. Let's get the numbers here. Open the candle up at 74.11, hit a high of 74.31, a low down to 71.40, closed it out at 73.09 for a loss of $103 or 1.39%. But what happened? Who cares, right? What actually happened? We pushed down to the 350. We pushed down to the 618. Local pullback, not local, I'm sorry. Pullback 618. That is the 618 Fibonacci from the 3K low to the 14 high, right? That's that's this guy. Well, hold on. Let me just slide out a little bit more. Everything's very slow. Oh, what's going on here? Anyway. Here's your low, 3K. Here's your high, 14. Here's your pullback, 72.31, 72.31. So why is that an important level? Well, in the Fibonacci sequence, 618 is just historically a very good level. It's also a very good buyback level. It's also a very good reversal level. So all those things considered, you would like to see support when you test it. So we tested it once. Good. We tested it twice. Good. The 350. So for those of you that are unfamiliar, I finally said, fine, I'll take the time and I'll just put it on, TradingView as like a thesis. So if you want to go look at that, it's there. This way I don't got to keep scrolling back and wasting our precious time here. All right. Currently, now regardless, if this was a 20 or a 50 or a 200 or a 100 or a 70 EMA, whatever, right? It's still a dynamic support resistance flip. This is an SR flip. You were above it. You had support. You broke below it. You had resistance. You broke above it. You have support. You're testing the level. This is nothing more than just coming down, sweeping, push, figure eight, find support, and go. All right? That's one reason to get long. If you're a dynamic support resistance trader, if your bread and butter is taking support resistance trades, buying support and selling resistance, then you are in on this trade right here on this candle. You bought that, and you probably added a little bit right here, just for good measure, right? Now, on the downside, for the bears in the house, we are still very much away from this downward sloping trend, which was the upper resistance from the local falling wedge. I know it can get kind of complicated, but stick with me here. You're going to be fine. Here's the local falling wedge. Here's the upper resistance. Not yet. Since we've created the line from the high, which is all the way over here on that wick on October 25th, to current trading, have we been able to push past, break, and close a daily above this line. Now, is this above the line? Yes. Is this the break and close? No. This is the open. That is the open. And that's why it doesn't count. Because as by default, the way that the scales sit on a daily chart, it had no other choice but to be plotted right here. This is what you're looking at. Was that a break and close? It was exactly the opposite. It was a break and deny. This is 100% rejection right here. This candle may be above it Only temporarily. Only because this is the open. There's a bearish candle that came down and closed below it. All right. So we have yet to break and close above that level. So breakout traders are saying to themselves like, I'm not going to touch it until we get a break and close above, and then I'll buy the retest. Sideline traders, right? They're in the dirt right now saying, I don't care what this thing does until we get a break and close above, right? I'm not going long. Okay. Short traders are saying, I will short this resistance until I'm wrong. And every time price gets near it, I'm just going to keep on shorting it. And I'll short it, and I'll short it, and I'll short it, and I'll short it until it disappears and goes negative, right? That's fine. So another reason to be short is the overhead resistance pressure is overwhelming. It's overwhelming. Even on this massive dump and this big old bounce, still at that same slope, are we, getting denied here. Now, one reason why that's not that big a deal, it's our buddy over here in the weekly. So when you look at the weekly chart, if you had a major level like that was dictating where price was going, you'd probably see some sort of indication of that on the weekly. Well, not so much. It's just through candles, and it's just nasty, and it's just not doing anything. It's just not poetic, right? This level here, that ray, sure. Right? But this guy over here, not really, right? Not so much. All right? So that's why when you look at something like that, you say, okay, it's important, but remember where you're at. Okay? It's important to the daily. This is not necessarily a level that is going to keep price down forever. You know what I mean? It doesn't have that kind of like coinciding variable to it. All right. Now, it does, like when it got denied up here, don't forget what else it got denied on. Horizontal support resistance. Major level. Right? A major level. At the time, it was a massive front run of the 20, and it was so far away, I probably wouldn't call it a front run. That's not really being fair to front runners, right? It was just too far away. So with the bounce right here, and then the pullback, are we starting? Are we trying to get an A, B, C, D? Or are we looking at a bounce, dead cat, smash your face on the wall, and come back down even further? Post lower lows. There's a lot of different ways it could go. And that's why we refer to, other things that are, also important. Dominance. I know, the big bad D in the house. Dominance entered range again from the south side. Once it entered range, it formed this like perfect little couple candle up, pullback, couple candle pullback, couple candle pullback. One candle pullback, one candle pullback. It formed this perfect little run up right to the top of range. Found resistance, pushed a little higher, got rejected, and then this was the telling candle because this candle dumped lower than the day prior, but even lower than the push up, right? So when you got that, that was like, okay, well, now it looks like we should be coming down here. It may, bump a little, drop a little, bump a little, drop a little, bump a little, drop a little, whatever. It could even have a massive push up just as a false break and then a big, massive dump down in order to say, hey, haha, just faked you out. But the idea here would be this should be your next major level right down at the bottom of range, 68.34, give or take. So we'll have to keep our eyes on that because that could change how we feel about some action that's in here. All right? All right. That was definitely Joel's fault. Where do you think the most liquidity is right now, considering that domino effect? I mean, we could look at heat maps, right? You know, that's essentially looking at the order book. So if we went to like, I guess we could pull like Tensor or something. We'll let that load in the background because that could take a minute. Well, was that like an error right away? What? Fix it, I said. There you go. All right. Well, anyway, it loaded up right away. So let's just go to like the 4 hour. We're on BitMEX. Okay, good. You said Binance. Well, I'm going to check BitMEX anyway. We'll go to like the 4 hour. And kind of zoom out a little bit here. Drop it down. And then let's get these things going up. We got some more opacity here. Yep. And let's see. Minimum volume. Good. So these are the stronger ones. That's fine. Okay. Get out of here. Go away. Thank you. All right. So where's the most heat? Where do we see the most orders? Where do we see the most action? The darkest, or I should say the brightest, right? 77.92. And beyond that, 68.42. And you got a little bit of action in here, 74.89, you know, ballpark zone. Now, if we bring all that back and say, like, these got to be, like, super high orders, right? Then that's what you'd be stuck with. That's what you'd be looking at. Saying high side, 77.92, low side, 68.52. So it's basically dead even. Is there more heat to the high side? Yeah. Than the low side? Yeah. Does price generally come up to the heat? Yep. Yeah, it usually does. Does it usually go down to the heat? Yeah, it usually does. Usually does. Not always. Not always. But just consider it like, not necessarily a magnet. Well, I mean, I guess you could. You know, kind of like a magnet. Consider it like these are areas of interest. Price may head to. And if it does head that way and you have orders set in that direction, then you might be in, you know, a good spot. All right. Okay, let's see. Alexander, complete sense. I hope that means makes complete sense, and now you understand something you didn't before. I like it. All right, I can't pronounce your name because it's letters and a bunch of numbers, but we'll just call you one-on-one. Thanks for the explanations. How do I plot this all-time high 236, or is it part of the Fibonacci? No, it is part of the Fibonacci. All-time high 236 means pulled from the all-time high. So from on the stamp chart, that's 19,666 down to 3122. So you're going to pull left to right, top to bottom, and then that'll give you your 236 is 23.6% back on a retrace back to 19,666. So you find your ATH is all-time high, by the way. So you just find your all-time high. Okay? So we can just look at our chart like that. And you're pulling a fib. Oh my God. Everything is so choppy tonight. I don't know what the deal is. You're just pulling a fib from your all-time high down, right, to your 2018 low, 3122, and then it'll plot a series of Fibonacci numbers, okay, within the scale. And even though this is a bit of a mess right now, well, I guess we could take these off now. We don't need these. Now that the other one's done, we don't have to look at this stuff anymore. Get out of here. Get out of here. Get out of here. Get out of here. Okay, so you're just looking at this, right? 19,666 is your number one anchor. 0 is your number two anchor. So down here. And then it'll plot these out. So you see right here, 236 says 7026. 382, 94, 41. 5 is at 11, 394, so on and so forth. All right, and that's over here on the left-hand side, third one down from the top. And right about the middle of that block is called fib retracement. Click on that and do it. These are all custom. In other words, like the colors and stuff like that. So, you could just use the default one. If it doesn't have the fib you're looking for, you could just double click it, go to style, and then just add it. All right, this one has 2, 3, 3, 8, 5, 6, 1, 7, 0, 7, 8, 8, 8, 1. So 0 and 1. And then if you want to add like extensions, you got like a 3, 6, 1, 8. Whatever, however you want to do it is fine. But add the 2, 3, 6. You're asking about the 2, 3, 6. Add the 2, 3, 6, obviously. Obviously, right? You definitely want to do that. Okay, let's see. Fernando, what do you got to say here? How you doing, man? Okay, got my coffee. Cool. It's getting cold, though. Looking at the daily, what do you think if close above the 10s? Could we get that little pump to... Wait, what? Could we get the pump to 76? Close above the... What do you mean by close above the 10s? Close above the 10s. Yeah, because you're asking about a pump to 76. Close above the 10s to me means you're closing above 10K. Let's see. Could we get that little pump to 76? Also, could you look at 12-hour? PA looks reversal to me, but Stokes is down. Yeah, I mean, yeah. Like if you're looking at a judgment call on if you're getting to 76, I wouldn't worry about the 12-hour. I would look at the daily. But yeah, I mean, we could pop the 12 on and just see what it looks like, but it's not going to be much different. All right. Right now, you currently just have the buyback low, push up, pull back. That's all you're looking at here. SR flip and, coming up on resistance, right? Like this is the 12 hours dangerous to use, right? Because of this right here. See that break and close above, right? And the retest, and it's all lost. None of that really happened. Didn't happen on the daily, right? The daily counts if you're looking for longer term plays. If you're not looking for longer term plays, then it's fine. But you'll get burned more on lower time frames than you will on daily on higher time frames. All right. As far as do I think we can get to 76? Yeah, I don't see any reason why not. Currently, your 20 DMA is sitting at 77.09. That's the second target after reclamation of the 9. So there's a lot of work to do here, right? You got to reclaim the 9. You got to push out of this level, this downward sloping trend, and then push up to the 20. 20 will get you 77.09. CME gap is at 78.05, right? So you expect to at least get 78.05. You expect to get that fairly soon. If that doesn't happen, then, when we revisit it in like a month or so or whatever, then, clearly you would get it then. But, yeah, you generally like to get that fairly soon. Based off the 350 and the thesis I'm looking at, somewhere around 9,400. So 76 is very much on the way to 94. So, yeah, I don't see why that would be an issue. Now, major resistance for today, for this candle, if we have low volume and no buyers, like 74.89 will get you to the top, or will get you to mess around with this trend. And that could be that could be the denial right there, right here. All right. Let's see. Roca, I think it's Joe Roca. Reminds me of ENG. Been holding with it for months and really happy when it got to make 10% and got out. Then in the next days, it pumped an extra 30%. Yeah. But that's the thing. Like you can laugh about it, so that's good. You're in the right state of mind. It's just a market. It's fine. You know what I mean? Catch your gains, get out. Don't even worry about looking back. It's okay. You look for the next setup, you hop in. It ain't no big deal. All right. Post a gain, you're good. You post losses, different story. Demcast. I love when you're answering a question, you always wander off and give all this other useful information. Well, at least it's useful and not useless. I mean, that makes me feel better. Oh, Roca. Oh, God, no. Oh, geez. All right, so Roke, I feel like Roka doesn't know the rules. Where's Joe L? This is his fault. Oh, Roka. You deleted a message. We don't we don't do that. You know? We're like 29 days away from 2020. All right, we don't delete messages. No. Then ENJ, sorry. So maybe he did like ENG, but we get it. Can I check it now? So you delete messages and now you want me to check it. And what the hell is 10 simple? Oh, simple moving average. Oh. Yeah, that was confusing. The tens is how I read it. That's throw like a 10 SMA and I know what the hell you're talking about. Do I use RSI or Stokes? Got RSI right here. This is a double RSI fast slow 714 with an 8515 and a 7030. So the fast runs on 7 as the time period look back, and the default RSI 14, that's the slower one, that's the normal one. And then the normal one 14 is based off of 7030, where the fast at 7 is based off of an 8515. So it's, yes, do I use them? Sure do, and they're right there. Also got a MACD up here that we were looking at last night. Right, we got a little buy indicator here in the daily, guys. Oh boy. And this is okay. That's just a little pullback for now. That's no big deal. And I also have on here a TTM. Oh my goodness. Oh, gee, what is happening? Why is everything so slow? Blame that on Joel. This is volatility as well as TTM. So it sort of shows ideas for squeezes, ideas for volatility, ideas for momentum as things push. And this one should be just another straight up RSI right here. Cool. I made a mistake and wrote ENG instead of ENJ. Not worth deleting, buddy. Not worth deleting. Let's take a quick look at ENJ. You want BTC or USD? And then we got a candle to look at. We talked all this time. I was just about to say, yeah, forget it. We'll do it tomorrow. But we'll talk about it. Super easy. I started off super easy for you guys. Nothing crazy. We're going to talk hammer. Oh, it'll be like 5 minutes. It'd be no big deal. Super quick, super easy. Roka. I learned it. Very nice. But you didn't tell me BTC or USD. I would imagine you want BTC. So we'll do ENG BTC. Let's take a look. Oh, well, we are still within a range here. Not much has happened. Yeah, unable to break this area here. Right, so, once we do, it's okay for longs, but for now, even though you are slowly working your way up, this turns into like opportunity cost. This is a great example of opportunity cost. Even if you bought down here, right, you wasted 2 weeks of your capital and got back to the same level before making a high that made sense. All right, so we want to get out of this. We want to get out of this zone here, right? This zone is not good. Based on the larger scale, we had a very nice flip here. So we had major resistance, lost it to the downside, push, came back up, got our support, and then we had this monster, ridiculous, super crazy bananas move up here, and then we came down, we landed on it. We bounced, we landed again, found support, pushed up, dropped through it, and then we started smashing our head against it. Dropped a little bit lower, but we painted ourselves a higher low. We got back into it again and dumped it back down, but again, another higher low. And then recently, we had the lower low, right? That kind of threw the whole thing off, and that's this right here. Now, the good thing about that lower low, it ended up being a double bottom with the push up to the high side. Unfortunately, the high side was just a fake out right here as you faked it out. So you pushed up and then you lost basically everything that you put in on the previous candle. So previous trend continues, which is resistance on this local channel, which is right here. All right, so you have an upward sloping broadening wedge on the very local side. On the bigger scale, you just have this ugly range that you're just unable to break out of and do anything with. Until we can, I really want to touch this, as it would only be probably misery in 100 ways. If you want to play the upward sloping broadening wedge, which is basically from this low, this high, up and over, then, you place sell orders, if you could short it, down to this level here, and then you ride this level up as support, buying that level and selling that resistance. Cool? Okay, very nice. So, don't worry, I took the liberty and did some stuff here. Just for you. All right, let's see. Okay, very quick. We are going to talk about candlestick patterns. This one specifically is a single candlestick pattern, and it is called the hammer. Now, a hammer is a bullish reversal candle. The context within where you find the hammer matters. In other words, if you found it in the middle of range, it's not going to mean as much. It should have little to no upper wick, all right? It should have a small body, or even if it's a big body, it should be proportionate with your lower wick. And we'll get to that in a minute, but your lower wick should be twice that of the body at least, all right? You should have, obviously the longer lower wick, but not only that, right? It should be about twice that of the body. The close can be above or below, so from open to close, so it could look, black or white. It doesn't matter. It could be bullish or bearish. Just the actual formation of it should be a somewhat small, a relatively small body. The open should be near the close, but not to the point where it's flat like a doji. And you should have that, longer lower wick that's at least twice the size of your body. Price should move with the confirmation. In other words, it's a bullish reversal candle. You should find it at the end of a downtrend or even a local downtrend. You want at least, 3 prior candles that are down before it. And then your confirmation candle is your next candle. That should close above your hammer. If it does, then the hammer is confirmed to be a hammer, at which point some traders will buy after the confirmation. So they'll buy that basically that third candle. All right, so now that you got an idea of what it should actually look like, I took the liberty of finding a few for you so that you could see exactly what it looks like to help you identify what they are. So, minus the vertical over here, you can see the wick right down here. And let me just get rid of that for now. There you go. Now, preceding trend is down, right? Price pushed all the way down here to this level. Now, the levels are relevant, but it's 49.33, just so you know. And then the bulls came in and bought it all back. And now they didn't get it back to open, but they got it much closer to open than they did to the low. And that's what's important here. There's actually no upper wick at all. And the wick is definitely twice the size of the body. This is good. The problem is it's not a hammer. I know. I did it to you. Because of that. In other words, the only way this is going to be a hammer is if the following candle closes above here. That's the idea. All right. So you want to make sure that, when you have even though you have the looks of what could be a hammer, right? So we talk about this as none of this stuff even exists. And we say, okay, well, we painted a hammer. And we did technically. I mean, it is a hammer. It's just not a confirmed hammer. You know what I'm saying? It needs to have a confirmation. Even though price did end up going up, relatively small. So you got a little bounce out of it, which is good. But this kind of ruins everything. You get that? All right, let's take a look at another example here. Now, even though this could be considered close to a doji, just in the distance between the open and the close, we do have a very small lower wick here, which is extremely upper wick, which is extremely small. Body is very small. In other words, so from open to close is very tight, 0.71%, and then you have a very long lower wick. So this is a really good looking hammer. Now, is it a confirmed hammer? Yeah, it sure is. So the confirmation candle has closed above the hammer, in which case the buyers would have bought this open here. Now, how long you're going to stay in that trade is up to you as far as exit strategies are concerned. We can see like the overall situation was way further downside. The very local situation was a very quick wick to the upside, right? And just the local trend ended up getting you some decent gains. But again, that's based off of exit strategy. That has nothing to do with this being a reversal candle. For this to be a legit reversal candle, price just needs to go up. Okay, so that's why you need to put it within context of what are we doing in this whole thing. And we can see, all right, well, clearly we're very much in a downtrend. So any longs you take should be few and far between because they're all counter trend trades. And as they are counter trend trades, right, you don't want to go heavily on them. Now here, I know I tricked you a little bit. What is this? Okay, most traders will allow this to be a hammer. All right. And it is. Technically speaking, it's definitely a hammer. This is when we talk about quality, when we talk about quality candles, quality patterns, quality setups, quality everything. This is not as quality as you would like because the upper wick is pretty big in comparison to the body and the lower wick. However, that being said, did this work out? Sure, your confirmation candle closed above your hammer, and then look at all the upside you had afterwards. Very nice. Now, again, when did you get out of this trade? That is up to you. Once we start learning more and more candlesticks, this would have been your indication to get out of that trade because this would be, essentially, you could call it a shooting star or you can call it like a gravestone doji. So, because the open and close is so minute, it's more of a doji than anything else, 0.06%. So kind of a big deal. All right. That would have been a perfect way to play candlesticks from essentially December 13th, 2018 to December 23rd. So almost 2 weeks you would have been in that trade just looking for this to post. And once this paint dried, you would have sold the open of the next candle. So you would have sold up here. So not a bad move, all things considered. Okay, let's take another example over here. This guy. So when we look at it, we say, okay, everything looks pretty good. Body's pretty good. Upper wick isn't too bad. I mean, it's there. It's noticeable. The lower wick is really nice. Absolutely more than twice of the body. We have 3 preceding bearish candles before it. Confirmation closes above it. Everything looks good. That's a hammer. Buy it. Right? You would essentially buy right here. So you would allow the hammer to paint. Finish up. Get on the chart. Dry. Confirmation to close. Right? And then you buy the third candle. So you would essentially buy this. You suffer a little bit of loss on the first day. You get it all back. No worries. You get a nice push up top over here. And then you got to make a decision. How long am I going to be in this trade for? You might have sold right here. Okay. As that's another candle we're going to talk about on another day. That's a hanging man. Right, price came back down, and then you had this monster move up top over here. So again, we're not talking exit strategies, right? But we are talking, reversals, bullish reversals. All right, here's another one. Super small upper wick, super small body. Now this is 0.67%, but we'll allow that for the hammer, and instead of calling it a doji, huge wick down in comparison to the body. Now, here's the problem. Do you have 3 bearish candles in front of it? Well, not necessarily. You got 2, and then you got 1 bullish over here. So we're actually in a very slight incline over here. Price is actually moving up. Even though price came down and painted your low here, didn't come down in trend. Right? You're looking at a low, a high, a pullback, and then a swing fail here. So this is one of those situations where you don't necessarily want to use it as a hammer. You can see if you did, you would have done well. But the issue is you want to be consistent. If you have coinciding variables or something, some other factor that is getting you bullish on here, then this is good confidence. It's a little confidence booster, but I wouldn't necessarily be making any moves off of that candle. Again, same situation, right? This is a beautiful looking hammer. The only problem is you don't really match the rules. All right, now if you want to bend the rules a little bit and say, well, I got 2 bearish, right? And I got, this ugly looking wick that was, certainly a high of the move. So a very local, pullback here. Okay, that's up to you, but put less capital on that trade. Maybe not maximize your capital. Maybe put half of what you would normally put on this trade. All right. And then you have your next candle. And does this confirm it? No, it doesn't. So this trade you wouldn't take regardless. So it didn't match the rules to the left. It didn't match the rules to the right. Did you get a little bump over here? You sure did, but then it went straight to range. Look how quickly this went nowhere. Just like that. All right, so now you're sort of stuck in this. Now you bought, if you followed the rules, right? You would have bought that third candle down here, right? And you would still be in profit this whole time, which is nice, but you got lucky. Okay, you got lucky. And again, the same situation here. This is another one for you to remember. Yes, even though it looks good, it's not necessarily a hammer, right? Your confirmation candle says no dice, and all you did was just go sideways. So that's a good way to know these things. All right. We could go through more and more examples, but that's probably unnecessary. Don't overcomplicate it. It's not a complicated candlestick pattern. It's just a single candlestick pattern, and it's also not to be used in and of itself. Just like every candlestick pattern we talk about from this day forward, a candlestick is just one piece of the puzzle. Whether it's a single candlestick, a double candlestick, a triple candlestick, you want to align those things with another variable, whether it's dynamic support resistance, horizontal support resistance, Fibonacci support resistance, something. You do want to put that with something else to confirm that the candlestick is doing what you want it to do. Try not to make any trading decisions based off of one single candlestick. That's not really the point of them. The point of them is to give you an indication, maybe a buy signal, maybe a sell signal, but you definitely need that with something else. Okay? And that is the hammer. Very nice. Okay, any questions? Is everybody good on that? Hopefully. Maybe. All right. Let's see. So that'll wrap it for the day. Let's see, what did BTC do over here? A slight push to the upside. Nothing crazy. Nothing crazy. Up about 87. So 1% up with the push. Still well under the 9. But now the 9 is pushed. So the 9 DEMA is now confluent with, the zone right here. It's a little bit before it. So the 9 DEMA is sitting at 74.62. Our level here is about 74.92. So about a $30 difference, give or take. Nothing crazy. All right. Learned it. Sorry, no problem. Exam. 5 minute equals 45 minute detail. That's no, it wasn't that long, was it? I tried to keep it short. I wanted to give you guys some examples. Fernando, BTC is pumping. I don't know. That's pumping is this guy. You see a $1,200 candle being posted, you let me know. That's pumping. Why up a percent is it's just not pumping. Not yet. But you get one of them big boys, you just go ahead and let me know. No man is all well explained on the hammer. Thank you so much. Yeah, no problem. So that's one of, I don't know, a lot. I have a very long list of candlestick patterns that we are all going to learn. If you choose to pay attention, then you will learn. Okay? Some of them can be very good for entry. Some of them can be very good for exit. And again, it's just one more piece of the puzzle, right? It's just, if you could stack, 10 things in your favor that are all like go long, go long, go long, go long, go long, you feel a whole hell of a lot better taking that trade, right? And that's what candlesticks are. Candlesticks are really good at just adding that one more, that special spice into the sauce. You simmer that puppy up for 48 hours and it just all works together well. It's just one more piece you could throw in there and say, okay, we are definitely good to short, or okay, we are definitely good to long. And that's kind of how you want to think of them or how to use them. And try to get a little bit of an edge in the market. This right here, would that be considered a hammer? Well, you don't have 3 preceding. So again, like quality would be lost. And again, you wouldn't take any trades off of this until this candle closed. And if the candle closed above it, then bang, you buy the next candle, and that's your move. Now, is it at the end of a downtrend? Well, no, not really. It's more of a pullback. So that's where things get a little awkward, and then you got to start saying, well, hey, what is a downtrend, right? Is a pullback a downtrend? And that's where those things come into play. All right, that will wrap it up for the night. Hopefully you got something out of it. That's always the intent, for someone to learn something, hopefully. Yeah, and that's it. We'll have to wait and see what Bitcoin does here. This would be a really good move up here. I would love to see a push to the 20. But ideally, looking for some action. And by action, I don't mean level by level by level by level. I mean, I'm looking for some violence. And by violence, I mean a very large, intense candle. That gets a lot of traders on board. All right. So we'll have to see. We have our levels to the upside. We have our levels to the downside. We're going to let this play out, and we'll be prepared either way. All right. Very good. Until next time, I want to see you guys on the exchanges, and happy trading.